Welcome to the Property Guide. You're watching ET Now. I'm Faye D'Souza. Thank you so much for tuning in. I'd like to start off by thanking you for all of the feedback and the encouragement we've received from you over the last year or so, and tell you that it's a very, very special week for us at ET Now. ET Now turns 6 years old. 6 is the magic number that we're focusing on the show this week as well. We're going to talk about how the market has done over the last 6 years, and we'll also focus on which locations are likely to perform the best in the 6 years to come. Who better than two of our very, very special guests to be part of this show on Property Guide. Ramesh Nair is the CEO and International Director at JLL India. Jayashree Kurup is the Head of Content and Research at magicbricks.com. Welcome, both of you, to the show. Thank you so much for coming in. I want to, very quickly toss to a quick package that we've put together that takes you through how the market has moved as an investment destination in the last 6 years. Take a look. The global financial downturn of 2008 had a huge impact on India's real estate sector. A sector which was already reeling under pressure when the RBI increased interest rates in 2008 saw a sharp correction in prices in the year that followed. But there was a silver lining. Experts believe the financial crisis caused poorly designed buildings and weakly financed projects to fail. Developers also realized the importance of sticking to the basic market principles. But how has the market performed since then? The year 2009 was crippled with a liquidity crisis. But from 2010 to 2012, the sector witnessed a recovery in investment and construction activity. The residential property prices nearly doubled in cities like Mumbai and Delhi, resulting in expensive, empty apartments. Even with a brand new government in the centre and strong economic growth on the anvil, the real estate sector has witnessed a tremendous drop in sales and new launches this financial year. Builders' inclination to build fancy, expensive homes rather than affordable ones has resulted in a supply shortage of close to 19 million homes in the affordable segment. With interest rates having softened a little bit and various government initiatives on the verge of playout, the real estate sector has high hopes that it will see growth in the near future. Right, so that's the real estate market. More downs than up, really, the last 6 years have been. Ramesh, I want to start with you. It did seem for a while around 2012, 2013 that we had come back up from where we were. But the real estate market, especially residential, is still hobbling. If we look at, say, the last 2-3 months, it hasn't seemed like any of the things we were expecting to, show an impact has really shown an impact on the ground. What is your experience right now with sales on the ground, with developers on the ground? Where are we?
Faye, I would slightly differ with you. I think when we look at a 6-year period, there is more positive than negative. So positive, obviously, the markets have become more transparent. We have a transparency index. India has moved from 52 to 40 in the transparency index. On the negative side, we've seen foreign fund flows, the private equity investments, which a peak used to be $7 billion back in 2007. Today it's come down to around $1 billion. But the biggest positive has been the capital appreciation we have seen in key markets. Look at a market like Mumbai. In the last 6 years, exact 6 years, from June 2009 to June 2015, we have seen a 90% increase in residential prices. Pune, we have seen an 85% increase. Bangalore and Gurgaon, we have seen a 60% increase. And Chennai, we have seen a 55% increase. So
that's still, actually, if you crack the numbers on that, that's the average fixed deposit rate.
Not exactly.
If I were to invest in a fixed deposit that gave me, say, 9%, over 7 years, it would double my money. So that's a 85-90% return.
See, overall, you're talking of safety, security of owning a physical asset.
Right.
You're seeing rental income through rental yields, although not much, plus capital appreciation. But if you look at 3 months, 6 months, which is not the right way to kind of analyze real estate markets, I think over a 6-year period, definitely been ups and downs, but overall positive.
Overall positive. Do you agree, Jayashree, overall positive?
Yes and no. I think a lot of people have actually entered the real estate markets in this time. Even though we have had an extended period of slowdown, the end users, it's become an end users market at some point. If you need a house, this is the time when you can actually step in, and there have been people who have stepped in. Vast volumes? No, I don't think so, because there are certain elements of the market that are not conducive to large numbers of people coming in. The most critical, every survey that I've run in the last 3 or 4 years tells me that the consumer's waiting for the home loan interest rates to settle down. Today, after it's settled down, the consumer has still not started buying, because there are lots and lots.
But to be fair, have the interest rates really settled down? We were expecting a lot more than what we got.
So did the consumer. Actually, the thing is that the consumer expected a lot more than this, even though the RBI governor saying not much in the near future, the consumer still expects more, which is why he's holding back from the market.
Yeah, Ramesh, I remember you keep talking about the fact that if we want to see any sort of an improvement in our resi market, we have to have better interest rates, better infrastructure, and people have to have better incomes flowing into their bank accounts. None of that really, like Jeshri was pointing out, has happened. But we are seeing a stronger commercial real estate market. Do you think there will be a spillover effect on resi eventually?
Definitely yes, because if jobs are being created, people will take more risks, sentiment will go up, become positive, and people will buy more homes. If you look at the bad news here is, I spoke about the positive news, but the bad news is unsold inventory. Back in 2009, NCR had an unsold inventory of just 50,000 units. Today we are talking of 150,000 units unsold inventory in NCR. Mumbai had an unsold inventory of just around 20,000. Today we are talking 70,000 unsold units.
Just to explain to our audience, what this basically means is that there are these many units that are available in the market that are not sold.
Which are under construction and not sold.
Not sold. Which means that even if people start to buy, there will be several months before we manage to exhaust.
Several years.
Several years before we manage to exhaust what's already available.
Even a very healthy market like Bangalore.
Yes.
Back in 2009, it was just around 16,000 units which is unsold. Today, even that's touched around 70,000 units. So, massive amount of construction happening, because of which we are not going to expect much of capital appreciation over the next 2 years. The government could have passed the RERA, which would have been a big positive thing for consumers, end users. Land acquisition bill definitely in the positive side. REIT definitely moving in the positive angle, smart cities moving in the positive side. But the 2-3 other smaller negatives which we are seeing is grassroots level impact on some of these reforms which the government is trying. We are yet to see that. Bureaucracy is still not changing at the pace at which the government wants to change. And the corporates are kind of getting impatient and their sentiments seem to be kind of getting a little doubtful.
Well, you know, this is a release that came in this week, and it says that the cabinet has cleared housing for all by 2022, and I thought that's nice of them. But what they've actually done is that they've said that the government has decided to bear the interest cost of up to 6.5% on low-cost housing loans for 50 lakh rupees in metro cities and 40 lakh rupees in non-metro cities. Now, given the task at hand, will this be enough?
One step in the positive direction, unless the government works really hard to get infrastructure in place, wherein connectivity improves towards far-flung peripheries, unless the government makes sure single window clearance happens. Today we have seen that project costs go up by 20-25% just because of delays in approvals. Unless these two things are fixed, I don't think interest alone can make so much of an impact.
I like the way he always starts with one step in the positive direction. He's the eternal optimist. But Jeshri, from where you're looking at it, can there be a concrete home for every Indian family by 2022? Is it at all possible?
Everybody will not be owning the house. In fact, if you read the fine print, it doesn't say that everybody will be owning a house. But there will be a big fillip to rental housing, which really means that, you know, about 50% of what they're trying to achieve is retrofitting, making houses that are unfit for living, all that, the upgrades of houses so that it is a livable house. Is it possible? Yes, it is, if you go on a mission mode. Have we hit the mission mode? We're far from it. One cabinet note saying that we will facilitate does not seem to be enough. You have to see action on the ground. Maybe we will.
Ramesh, before we go into break, tell us what the commercial market has been for the last 6 years and which markets have you seen the most growth in?
So the positive news is commercial demand over the last 6 years on an average has been around 28 million square feet annually. The bad news is supply has been 37 million square feet. So every demand of 28 every year, we've seen a supply of 37 on an average hit the market, because of which vacancy in key markets like Mumbai has gone up. In Delhi, it's gone up from 20 to 27. In Mumbai, it's gone up from 13 to 20%. So that's definitely the bad news. But the good news is demand is increasing. Last 3 to 4 years, demand is steadily increased. Going forward, it's going to, our prediction for this year is demand is going to be at least a 32, 33 million square feet of office space demand.
All right, so hopefully that sort of positive office space demand will have an impact on the residential market. We're going to have to take a very quick break. When we come back, we'll talk about what locations both of our guests believe will perform the best over the next 6 years. You want to stay tuned for that. Don't go anywhere. Welcome back. You're watching the Property Guide in ET now. Thank you for staying with us. Both of our guests are still with us, and we're talking about the markets that are likely to do well over the next 6 years. Celebrating 6 years at ET now. That's our birthday this week. The idea is to find a market that you could possibly pay attention to as an investor if you're looking to invest in the residential market. I want to start with Jayashree. Jayashree, we know that a market like Pune has done remarkably well over the last 6 years, and that's likely because it got a lot of the spillover that would have ideally gone to Hyderabad. Now, if I were to look forward from the 6 years to come, where's the next Pune?
I would still be very conservative and say Pune is among the cities that are going to do well for the next 6 years. The fundamentals are good. The market is vibrant. Despite all the slowdown in the national market, I think Pune has still performed, and I expect it to continue doing well. Another market that I actually think is on the upswing is the Gurgaon market. The Gurgaon market, it has been slow. It's almost at a standstill right now.
I mean, going by the unsold inventory that we've heard about, going by the fact that
6 years.
Yes, also the delays that we're hearing about in the Gurgaon market, it's going to be more a battle of sentiment than anything else, isn't it?
I do believe that the demand in the Gurgaon market is very, very high. And because of that very high demand, today in the last 2 years, because there has not been much sale, but there has been a lot of stock, the ready stock is what brings the consumer back to the market. And I'm seeing a lot of demand in the Gurgaon market as far as the consumer searches go. And Gurgaon, remember, has all the corporates there. So the volume of, and there is fresh commercial take-up still happening in the Gurgaon market. I still think that the Gurgaon market is it can become another really, really hot run in the next 6 years.
Ramesh, I want to ask you to rebut here. In terms of commercial space, the uptake or the demand or the interest that you're seeing in Gurgaon, do you see enough of it to maybe take it through the next 6 years?
Yeah, in commercial, the two markets over the last couple of years which have seen the maximum demand is incidentally Gurgaon and Bangalore. A lot of it has to be is driven by the e-commerce sector in both these cities, but we have seen significant amount of uptake in these markets.
How much will pollution in Delhi hurt the the markets going forward? I'm going to ask you. You live in Delhi. How much does it hurt you?
Significantly. Okay. Today we feel. I mean, we've always read about pollution. Today we feel the effects of pollution, and I do believe that this is a short-term thing. Delhi's faced this before. Delhi's come out of it before, just through policy initiatives, and I think it should work.
My two picks would be within Mumbai. I would take Navi Mumbai and western suburbs. Navi Mumbai because of the new airport which will come up and the Trans Harbour link which will happen. Western suburbs because the last 4-5 years what we have seen is the western suburbs actually lost a little bit of its charm to the eastern suburbs.
Yes. Anybody on the Western Express Highway during the rains in Bombay will realize how much charm has been lost by the suburbs. Yes.
And once the government fixes the coastal road scheme, they're talking of 3 to 4 years. Even if you give a 6-7 year period for it to get implemented, I think that will change the overall dynamics of western suburbs, which has been subdued over the last 4 years. In terms of the second city, I would definitely pick up Bangalore for the sheer amount of jobs it's creating in IT. definitely the IT capital of the country. We are talking of close to 15 million square feet of total office being absorbed, 10 million which is the typical leasing, and 5 million with the large campuses of people like Infosys and Wipro. 15 million is equal to 150,000 jobs. For every IT job created, there is one more job being created. So we're talking of close to 3 lakh jobs being created in Bangalore. And even if out of these 3 lakh people, even if 50,000 people want to buy homes, I think there is enough demand to cater to all these unsold inventory which is piling up.
What's your favorite Bangalore neighborhood right now?
Definitely the new airport road and the Martha Halli, that belt, the Hebel belt, the outer ring road. These are obviously established locations. We are seeing consistent amount of demand going forward.
Okay, I'll tell you what I'm hearing from what we just talked about. There's Pune and Bangalore that's being driven by IT demand and peripheral services that feed IT, that have maybe very little to do with what the government can and cannot do for them. The other two markets, whether we're talking about Gurgaon or we're talking about Delhi, we're talking about Mumbai, every reason you listed involved a certain amount of intervention from policy. Whether the Navi Mumbai airport does come up, whether the coastal road does come up, whether the Navasiva Sea Link comes up, whether the air is cleaned up in Delhi. There's a lot for these markets dependent on whether or not the government can come through. So tell me something, if I were to enter into Gurgaon right now as an investor, simply as a retail investor, so I buy a home, I'm hoping that in the next 6 years the prices go up, the rentals go up. What sort of risk am I taking if the government doesn't actually do what you're hoping that it will do?
You will have to hold for a longer time because the fundamentals are strong and it will happen. If not 6 years, it might be 8 years. But sometime it has to change. The one thing that I would say is if you walk into Gurgaon, today you can pick up a property that is ready. Therefore, you don't the risk of delay and the consequences of delay, you don't have to bear. And the rental market is fairly robust in Gurgaon. It hasn't dropped. It is it's not zoomed up, but it's steadily rising, which means that there's healthy rental demand. So if you have to hold for a longer time, at least your property is paying for itself.
So longer, when you say longer, we're talking about 6 years, so longer would be 10?
Maybe 10. You still have to take a 10-year horizon if you want to do well. If the policy comes up, it may be 5.
All right, and if you were to go out right now and shop in Gurgaon for an investment for the, let's say, a 10-year horizon, what would you look at? Something under construction, something ready to occupy? What neighborhood in Gurgaon would you buy in?
See, I would say that if you're a vanilla investor and you're actually going for an investment for a long time, I would say go for the Sona region. It's a new developing master planned region of Gurgaon, very close to the hills, can't develop anywhere beyond that. So it is like typical suburban living, and go for the right developers. There are, for every 10 developers who are not delivering, there are 2 who are delivering and delivering quality. Go pick them and find what your developer is all about and go for the right ones.
Ramesh, same question for you. If I were to take your advice and buy on the western suburbs right now, and the sea links or the coastal roads that we're talking about don't materialize in the next 7 to 8 years, what sort of risk am I taking on then?
I think overall today, if you look at all the talent pool which work today, if you look at BKC or Lower Parel or Nariman Point, close to 60-70% of that talent pool today come from western suburbs. So there is already an established critical threshold of talent available. So I don't think there is too much of risk involved in going to western suburbs, even if the coastal road gets delayed.
All right, and if you were shopping in the western suburbs right now, it's a long stretch of road. There's the eastern side, and there's the western side of it. Where would you ideally go out and buy? What ticket size would you recommend?
Given the prices increases you've seen in areas like Andheri, I would definitely bet on areas like from Borivali to Dahisar.
East or west?
West.
Okay.
West. So.
All right. Also, before we wrap up this segment, is there a commercial property opportunity that you foresee anywhere in the country for an investor who's interested?
I think across the country today, commercial is definitely a good bet. Today, most developers are coming with smaller units, 1,000 square feet, 2,000 square feet units, which one can go pick up.
Any recommendations that come to mind that you...
Markets like BKC, markets like Andheri will continue to grow. And this is definitely a good time to go pick up small office space.
All right, so those recommendations you just heard, of course, if you want more information, you can get in touch with us. Our email ID is at the bottom of your screen. When we come back from the break, we'll talk about Bangalore and Noida, and we'll answer questions you sent in. Don't go anywhere. Welcome back. You're watching the Property Guide in ET now. Thank you for staying with us. We have some questions we'd like to answer right now. Atul Jain has written in. He says he's almost finalized a flat in the project by Zodiac by Amrapali Group in Sector 120 in Noida. He wants to know if it's a good project for an investment and if there's anything he should be worried about when buying in Noida. Jayashree?
The NGT. Please, when you buy a property anywhere in the Noida extension area, it is worthwhile going and checking out and getting it written that it is not part of the National Green Tribunal order, because those projects are definitely getting delayed.
If I'm an average customer who's buying an apartment, how can I check whether the project has any sort of NGT problem?
Get a legal due diligence done. It's worth putting that 5,000 rupees and getting it done, because there are legal firms which do it for you, and it's good to get that legal due diligence done.
Ramesh, any advice for him?
Pricing currently at around 5,000 has seen an appreciation of close to 75% in the last 5 years. But like Jayashree mentioned, definitely needs to be out of NGT if one has to invest. If something is there in NGT, please wait till that's cleared, which may take some time. But what we're also seeing is in this area, the last 1.5 years has not seen any capital appreciation. So whatever appreciation was seen was before that.
All right. So it's not a very positive view, but then again, it's what most of our market looks like. Narahari has written in, he's invested in a 3 BHK apartment at Bharatiya City in Bangalore. He wants to know if this was a good choice from an investment point of view. Ramesh?
Those locations where this project is located, Tanisandra, Bellary Road, definitely is on the growth corridor. Bangalore is a very steady, mature market, so don't expect out of the market kind of returns. But overall, in the long run, will give a good, steady return.
Well, Sthiti has written in, she's looking for a good project in Bhubaneswar. She says it needn't be a high-rise, as long as it's a spacious 3-bedroom apartment of about 2,600 square feet. There's a budget of 60 to 70 lakh rupees. Do you have any suggestions for her on the website?
She should look at the northern part of Bhubaneswar, Patia, Raghunathpur, places like that. Nothing in the primary market, but plenty of options in the secondary market. And within 60 to 70 lakh, you should be able to get about 2,100 to about 2,800 square feet.
Any risks if she's going into the secondary market there?
This is a good market. This is a good part of the market and active too. So I don't think there are too many risks involved.
All right. There's another question from Bangalore. Archon has written in, looking to buy a 3-bedroom apartment in the Panathur area of Bangalore since it's close to his place of work. What's the present status of the area? What appreciation can he expect? He has a budget of 60 to 75 lakh rupees. He wants good projects, good builder credentials, having all of the legal clearances. That's a good and important list to have if you're buying an apartment anywhere. Do you have anything in that area that you think would suit his budget?
So current pricing is between 4 to 6,000. Total unit size between 80 lakhs to around 1.2 crores. Good connectivity
So it's out of his budget. He's at 60 to 75.
Yeah, he'll need to stretch. He'll definitely need to stretch. Good connectivity to Whitefield. It's behind the Sarjapur main road and the old airport road. A lot of good developers are doing projects there. Nitish, Assets, Embassy, Rohan, Aditi, some of the projects one can look at.
All right, so there are lots of options in that neighborhood. If you have any questions about buying a home, feel free to write to us. Our email ID is at the bottom of your screen. You can reach me personally on Twitter as well. Ramesh and Jayashree, it has been an absolute pleasure. Thank you so much for spending time with us. Thank you so much for watching.